when are we uh, convinced ourselves versus what do we think the group will like?
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Alex Farcet with us. Alex is the co founder of Rainmaking, a climate focused angel syndicate with over 1,800 LPs investing alongside. In this episode, we talk about middle class or venture investing growing to 1,700 plus LP base, the empathy first approach on investor side and founder side, de-risking the deals, how do they run investor operations for the syndicates, and lots more. So without wasting any time, let's dive straight in. Hey Alex, so good to have you on the VC 10X podcast. How are you doing?
I'm well, Prashant. Thanks for having me.
Yeah, it's a pleasure hosting you. To start things off, can we first have your story and how you started investing?
Yeah, I went to school mostly in Africa. Grew up mostly in Africa. I was born in Spain, a French citizen. First job out of school, I moved to Silicon Valley and slept on a friend's couch. This was the early 90s. That's how long ago it was. So I had that bug. Then I came back to Europe and had a corporate career with DHL and Deutsche Post, where I basically wore a suit and tie for many years. And then life threw us a curveball, and both my son and I had cancer within 12 months. We're both okay, but my son was 2 years old, was diagnosed with chronic leukemia, and I had a close call with a melanoma. And yeah, basically my definition of risk changed at 40 something, and I gave up all the corporate benefits and just went back to being an entrepreneur. And in late 2009, I met my partners at Rainmaking, and we launched what at the time was the second accelerator in Europe. There was somebody running something in London, and we launched Startup Bootcamp in 2010. Supported and invested on a global basis over 1,400 startups, and I've done a lot of work with corporates as well. In the past 3-4 years, I've kind of woken up, maybe belatedly, to the UN SDGs, the climate change challenge, and just decided to build a syndicate to deploy more private capital towards startups that are addressing the climate change challenge.
Yeah, certainly. That's a very powerful story there. And besides, what you're doing at Rainmaking again is very interesting. So, can you share how Rainmaking is connected to what you're doing at the Angel Syndicate that's more climate focused?
Yeah, so Rainmaking itself, if you will, the umbrella organization is a partnership of serial entrepreneurs. So collectively, we've built over 35 startups since 2010. Startup Bootcamp being one of them, but there's also some tech startups and some other business models. Um, and Rainmaking Impact, there's two of us. My partner Alan Brandman and myself. We spend our entire time. We're 100% focused on this. And we started in our first deal in June last year. We made our first deal, and we made 5 investments in the second half of last year, and we're making our ninth total now. So we're about on a clip of one a month, minus the dead months in Europe are July and December. Yeah, and we can talk about the subtle differences in how we're going about that, but basically, we've grown the syndicate to 1,700 members, and we're co-investing in VC-led deals, and we're investing our own money in each deal.
Yeah, certainly. That's a very interesting model. So, can you, 1,700 LPs is a big number, like for any syndicate, right? So, how did you get the LPs interested in the first place and get them to believe in your thesis and then start investing with you?
Yeah, so maybe to start with, why that big number and what's the bigger vision. So the idea is to get to 10,000 people deploying an average of 10,000 euros a year. If we can get to that sort of volume, that's 100 million euros in dry powder in private capital, which a regular angels club could never do, without any of the overhead and sometimes weird dynamics of a VC setup. And so the question is there 10,000 people in Europe and elsewhere who can do 10,000 euros, who have are willing and able to invest 10,000 euros? Of course there is. There's many, many more times that. And why aren't they? Well, they're busy, being an angel full time. I mean, very few people can do that. and they can't deal with generating the deal flow, selecting the startups. So in a way, we're part of this solo GP movement, if you will, but we're doing it in a very structured way. And it's not based around an individual, with some sort of rock star status. It's more about the process and the focus. So 1700, we started with 45 people in March last year, and we've been basically proactively recruiting founders, corporate execs, and high net worth individuals. Those are the three segments. And in a way, we're somehow, we're not crowdfunding. This is a very different thing. And we're not the sort of portfolio management. There's a kind of very large middle. And the way we look at it with climate is, there's both an opportunity and an obligation. That's how we feel about it. There's an obligation to do something. And obviously, there's going to be some very, very exciting startups on any of these topics, whether it's energy transition or food or decarbonization, transportation. So, I think that's what we're tapping into with the private investor network.
Yeah, certainly. That's very interesting. And would love to talk about why you've chosen this climate focus, especially, and not have like a broader focus wherein you're open to all types of startups.
Well, not necessarily all type of startups, but we chose. Basically, you look at the biggest culprits of emissions. The sectors that are driving the big emissions, and those are covered by and obviously energy, transportation, food, and then they're kind of more of a horizontal around decarbonization, so having to do with carbon capture, sequestration, measurement, etc. So, I mean, the why, the fundamental purpose, if you will, is we have kids. We're worried. They're going to have kids. Every day that goes by, we're not making a hell of a lot of movement towards all these net zero commitments. Clearly there's something going on with the planet, and there's just a sense of purpose that, what can we do? So we're not necessarily smart enough to, contribute to the green hydrogen invention. So what levers do we have? And we thought, well, we're really good at sort of both sourcing and selecting startups and generating interest from this private sector. And if we can get to that 100 million euro deployed annually, that starts to make a dent, I think.
Certainly, that's a very great direction to go into. And one more aspect that I learned about your investing is that you're an empathy first investor, right? So, what does that mean in terms of maybe empathy in terms of investors and also in terms of founders?
Yeah, I mean, it comes from having been on both sides of that table. So you speak to any founder, and fundraising is not the reason they started a startup, and yet they find themselves some portions, 50%, 80% of times, spending time on what is felt as a distraction. They'd rather be building their business. So there's an empathy for what that's like on the founder side. And then on this private investor side, with the issues, there's some limitations with angel networks, and the biggest one being that they're locally strong but regionally blind, at least in Europe. You might have the Madrid Angel Club or the London Angel Club, and they're going to see local, perhaps national startups. They're not necessarily looking for the very best deals in a given topic. And then the other is you're getting a lot of deals at the same time. And the people sending the deals don't always have skin in the game. So we've tried to flip that. So on the founder side, we approach the founders. We don't seek random inbound. So the dynamic typically is you're a founder, you're approaching me because I'm sitting on a pile of money, and you're in pitch mode. From the first minute, you're in pitch mode of trying to get to that outcome. Whereas we reach out to founders and say, look, you're the rare commodity. Money is, there's a lot more capital looking for good ideas than the other way around. And, we're going to help you hopefully lower the pain of fundraising. And so, can we help you find some VCs? And by the way, we'd like to invest in that round. So that changes the rapport and the dynamic of now we're working together to solve a problem. So it's empathy on that way on the founder side. And then the empathy on the investor side is, again, it's overwhelming if I have 10K, 50K, and I want to deploy and I don't have the bandwidth to join an angel club. And if I do, it's overwhelming. So we send one deal at a time. We're always investing our own money. So we have skin in the game, and we're always co-investing with a VC, which is a way of de-risking and maybe, adding some some bandwidth on due diligence, on dry powder, etc. So it's presented in a very sort of personal way, but we always use the co-investing. So would you like to co-invest with us? So we're never pitching, and the founders are not pitching us. We're just trying to solve a problem, which is how do we get this amazing startup the capital it needs to have an impact?
Absolutely. Yeah, that's certainly a great approach. And another aspect is about, you are also de-risking these deals for your investors by actually co-investing also with other reputable VCs that are investing in those deals. So would love to learn more about that de-risking aspect and how are the deals flowing? Is it like, okay, the VCs reach out to you that, okay, we are investing in this deal. Do you want to jump in with us? Or is it more like you reaching out that, okay, we are investing in this deal and you bringing in the VCs into that deal? How does that work?
Yeah, it's a combination. So obviously, it's happening more and more. But obviously, if you can get in on the radar of the top VCs and they see you as an excellent top-up mechanism. And by the way, we use a platform called Odin, which allows us to aggregate individual checks into one line on the cap table. So that's very cap table and investor and founder friendly. That we just add, essentially one signature. Um, But mostly it's us reaching out to founders and saying, look, it looks like you're making great progress. Are you already talking to VCs? In many cases, they are because they're good. In some cases, they haven't started, and we help. We've spent a lot of time building relationships with the top tier, most active impact VCs in Europe. Um, and then the job is to have build a rapport and basically get an allocation. How do we get in on that round? And part of the value prop to our members is, if you have 10K, it's going to be very difficult for you to get in on a VC-led round, maybe in a seed or an A round, unless you have a rapport, an existing relationship with the founders, and they really want you on board for essentially for more than your money because of what you bring. Whereas with us, we're saying we might take a 250K allocation or a 500K allocation, which is meaningful to the round, but then we break that down into smaller individual checks, and that's what gives access to the individual investors. And then on the de-risking, I mean, there are two of us doing this. We're doing this full time, but obviously we don't have as much bandwidth. I mean, I was talking earlier. Due diligence is a bottomless hole. You can just go down and just keep going. Like you're never satisfied. I haven't, looked under in every corner of the data room, etc. So, in a way that the professional approach to due diligence by the VCs is a de-risking. Of course, we make our own decision. We have our own due diligence, but we don't necessarily have the bandwidth to call every reference or talk to every employee, etc. That's one aspect. And then, of course, the VCs, the fact that a top tier VC has selected that startup is a signal. They must have looked at lots of other startups like we did. And so why did they pick that one? So we make sure we speak to the lead investor at the VC and understand their rationale. Sometimes they share part of their due diligence with us. And in representing that to our co-investors, to the syndicate, we say, look, we've spoken to them and they agree with us. This is a great case, so much so that they are leading the round.
Certainly. Yeah, I think that's a great approach in de-risking and also like limits your effort as well because there is also another one also doing their due diligence. So that adds to your diligence as well. So de-risk the deal, right? And then since you're now running this syndicate now, so let's talk about why you decided to take up this syndicate model and tap into this middle class of venture investing as you call it instead of maybe starting a venture fund itself because you could have gone that route as well.
Yeah, it's a very important question, and we've been offered. Could I give you a little bit more money, and then you don't ask me every time to decide case by case? But so it's a quality of life and an economic consideration. So the quality of life is quality of life and focus. So quality of life is every minute we're not spending talking to founders or growing the syndicate is kind of an overhead. It's a lost minute. And inevitably, if you're doing a fund, you're going to have some overhead. The first one being reporting. You're managing a portfolio and you have to answer to the investors, why did you make the last investment you made? How are they tracking? Here, because we are in the spirit of co-investing via this platform called Odin, is look, you made your decision. We gave you our rationale for why you did it, and now you're getting essentially the reporting directly as a virtual shareholder, because it's a complicated story, but they're not directly on the cap table. So we eliminate that overhead. We don't have that pressure of we have to deploy the capital and we have to show progress. We just look, we co-invested, now we're in the game. Let's do what we can to support the founder. So that's on the quality of life and the focus angle. And then economically, there have been articles written on this, but if you have a fund, you're essentially, if you understand carry mechanisms, you have to return, let's say a 1x, you have to return the initial investment on the entire fund with any liquidity event. So if you have one exit, you're going to have to return all of the initial investment before you can earn any carry. Whereas here it's a case by case carry. So if you have a home run, you're just returning the initial investment on that one investment, not the entire fund. And there have been some studies and some simulations done, and that, depending on the size of the home run, that can be like a 10x difference on the return. So economically, it makes a lot of sense. But it was mostly, we just don't want to deal with the overhead. We love helping founders. We think we can get to these really big numbers without the infrastructure and overhead and dynamics of a VC, where you have so much time to deploy the fund and then you're already raising the next fund, etc. Another one, by the way, is it's well known. I mean, a first-time fund manager is going to have to spend, at least in Europe, 18 to 24 months fundraising. We got our first deal done in 2 months. Of course, it wasn't anything on the size that we could have done with fund, but we were in the game. And then all of a sudden, we were doing our second one, and now we're doing our ninth one, and we're beginning to have impact. And the idea is to do this for the next 10 years, hopefully do more than 100 startups. And, if we do well, we'll have impact, and both on climate change itself and on the founders and obviously economically.
Absolutely. Yeah, that's a very interesting approach. And also would like to learn more about the model of investing. So I feel that it's somewhat closer to the crowdfunding model. Is it or how's it different from the crowdfunding model? Because there are crowdfunding platforms like maybe Republic, and like people can go sign up there, see the deals, invest, like do their own diligence based on the information that's already there, and then put their money in, right? So how's that different from
Yes.
the model that you're using to the platform called Odin?
So there's a couple of fundamental differences. One is that you have to demonstrate you're a sophisticated investor, and Odin is itself covered by the UK Financial Regulatory Authority via an umbrella organization. So you're going to have to do some KYC. You have to answer a questionnaire to demonstrate you understand the risk. You have to go through some anti-money laundering, sources of fund, etc. So it's not a $5 or $1,000 or pound or euro investment in what is typically in crowdfunding is consumer products or consumer plays. So it makes sense for them to be crowdfunding because they're also getting some marketing impact. Our minimum investment start at 10,000. So it's not crowd. We don't want that crowd. We want the crowd who is more sophisticated about understanding the risks and rewards of venture, but don't necessarily have the bandwidth, to be a full-time professional angel. And they're putting in pretty significant ticket. I mean, 10,000. Not everybody can do that. A lot of people can do that, and the biggest individual ticket we've had is 300K. And but on average, I think the average ticket so far is around 20. So this is not crowd territory in my mind. It's but that's not to say there is a very large group of people who could do that, and we're trying to get them around, gathered around our syndicate.
Yeah, certainly. Yeah, and I would like to cover another aspect. So, as an angel syndicate, uh, since you're the syndicate lead, so are you negotiating with the founder about the deal terms? What will be the valuation? What will be the percentage allocation, right? And since you're also co-investing with the VCs, they'll be also be the part of the conversation that how much allocation does the syndicate get and how much allocation does the fund get, right? Based on the valuation you decide, right? So,
Yeah.
insight into that. Yeah.
Yes. So our starting point is in building the relationship with the founders and saying, look, we think we're a very founder friendly syndicate for a number of reasons. I want to get to a point where we can say to a founder, if we take you on, we can get you 500K in 4 to 6 weeks, and you'll have one line on the cap table, but you'll have a lot of really, really interesting people behind. And so it's the founder who decides, I've lots, if they're doing well, they have a lot of angels knocking on their door and go, well, the Rainmaking impact makes a lot of sense. I mean, they're super easy to deal with. I don't have to invest a lot of time fundraising. That lowers a big pain for me. I don't have to chase all these individual investors, etc. On the deal terms, there's always a lead VC. So the lead is leading and typically is leading the negotiation. So in that sense, we join the existing terms. And, obviously we may have an opinion, and if we don't like the terms, then we don't join. But we're not, it's not overhead. I don't want to describe it, similar to what I said before, but we're not spending time on that part. We're happy with the terms we're seeing. That's in place. The term sheet is in place, etc. So we just focus on, getting our allocation done and building the rapport with the founders so that we get invited.
Certainly. Yeah, I think that's great, and would love to learn more about how you run the overall operations of the entire syndicate. Right? Is it a lot of work? Because I heard you saying that like syndicate is a lot easier. Of course, you like talked about that right now, that there is less overhead than running a VC fund. But can you give more insight into what goes into running an angel syndicate?
Yeah, it's a good question. It's not to say there isn't work. There's a ton of work, but I think it's directed at the right things. So there are two of us, my co-founder Alan Brandman and myself. So he's focused on the outbound. He's essentially at the top of the funnel, reaching out to startups, doing the first selection, and then I'm the relationship builder, and I try to work on the allocation, and then I basically make the investment happen. In chasing the syndicate. So, I mean, the process is exceedingly simple. We've come to that through iteration, but essentially it's an email that goes out with an investment memo, which we've written in our language, which explains our rationale for investing. But of course, we have a lot of data and input from the founders on that. And that is, by the way, part of working together. They're not pitching us, they're helping us present the case to our syndicate. So already there's a dynamic of like, they're not glossing over, like we're really trying to present this in a transparent way. And then I record a 5-minute video with the founder or founders that is included in the mail, very quick intro. And then we say, look, 1 week from now, 1 week from today, we have a live Q&A for an hour with the founding team. If you can't make that, we'll record. So you get an email, investment memo, deck, quick video, and then 1 week later you can come and join and ask the question, listen to the founder, look him in the eye, and ask sharp questions. And then essentially the founder is done. Then it's our job to go and convert people's expression of interest into money in the bank. And that is where there's no automation there. This is where the elbow grease, where the grunt work begins. And we could do some automation, but I want the syndicate to feel that when they ask a question, it's me answering. We're just on it, and it's very personal. And this is where the trust that there's a human being behind this. They're investing their own money. So if I ask a question, and we're not pitching, but of course we're trying to get to the allocation. We've already decided. So, but yeah, we use Affinity. If you want to get into the weeds, like we use Affinity for which is a CRM investors use a lot. We use HubSpot for communication. We use yet another mail merge as well. We do use tools, but when it comes to getting the deal done, there's a lot of hand holding, being very responsive in a personal way to individuals asking questions and expressing interest. And if you do that enough, they start introducing their network. They start introducing founders, and it starts to, we can feel that, as people say, I've heard of you guys, even founders we reach out to, but you got to do the grunt work at the beginning, and still to this day, I don't think we ever get, and I don't want to build a platform where you sign and then you tick a box. It has to be more human than that.
Certainly. And let's also talk about, like, is there any kind of impact that the recent slowdown has had on the angels and how they are thinking about investing, and their behavior, or how much allocation syndicates get, because like the dynamics have completely shifted, right? So do you think what has been the impact for the angel syndicates and angels in general?
Yeah, there's certainly. We're oddly enough, we've started investing with the downturn, so we've never invested in the good times. We've gotten 9 deals, or we're pushing the ninth deal down. We've got 8 deals done in horrible times. The fundamental is good startups get funded in any period. But it's harder. And lots of our members, are saying, "I'm pausing right now. I want to know what happens with the world, and my money is. I'm earning more money from interest in my bank account than by taking risks, so I'm parking." But that is one reason for having a larger group, is that at any one time, when you present a startup that's doing seaweed for alternative protein, there's some portion of that big group that finds that interesting. Some sub portion of that group happens to be liquid and willing to take risk. And when you find that little subgroup, is it enough to do 250 or 500K? And that's one rationale for having a larger group, and that's why I think we're able to do a pretty decent clip of one deal a month at the moment. Um, but it's tough, and definitely founders are doing what they should, which is extending runway, raising as much as they can to be safe. And that's why we're also, when we do our allocations, we're saying, look, can we do 250? But for example, what happens if we give you another 200? Most founders are saying, yes, please, I'll take that. I'll take the extended runway.
Yeah, certainly. And like one more aspect is there ever a situation where you're double pitching that, okay, the founder has done their conversation with your LPs that are there in your group, and then after that, that there's a subgroup of people who are interested in this deal, right? So do you also like have to pitch again to the LPs that, okay, there's a you showed interest in them, now how much are you investing, right? They say, okay, I'm investing maybe 5K, 7K. So you say, okay, can you write a bigger check, right? So does that kind of pitching also happen as a syndicate lead?
Yeah, if I understood the question, I mean, the where we earn our upside, if you will, is in converting somebody saying, that's interesting,
Yeah,
I'm expressing interest,
right.
to money in the bank.
Yeah,
So, it is our job
yeah, yeah,
to, was that your question?
yeah, kind of that. And also like maybe increasing the check sizes of individual LPs if you're able to do that aspect as well.
No, I don't. No, we've sometimes, maybe if there's somebody who's willing and able to write a bigger check, we may improve the terms slightly.
Right.
So reduce the carry or whatever to get him on board. But I think I can honestly say I've never said, oh, maybe if I'm trying to get to close the allocation, I'm very close. Like, would you mind doing 20? But in general, I'm not in that mode. I just say, what ticket size are you interested in? What are you comfortable with? Given your circumstances of where you are with your finances, your appetite for risk, etc. And people make their own decision. They do ask what's the minimum, and we've played with the minimum to see what happens. But no, we're not. I hope not too bad. Doing convincing, trying to extract more out of people. People make their own decision. We're again in the principle of co-investing.
Yeah. Yeah, certainly. That's, I think, a great approach again. And lastly, my last main question before we move on to the rapid fire round is about what's been your biggest learning, investing over the years and running this syndicate.
Yeah, I have to say, I've never been a professional investor. I mean, we, ran an accelerator is doing investing, but a lot more than that. I'd say I certainly have newfound respect for, full-time professional investors, VCs, some professional angels. It's difficult because, you're never sure. And back to this bottomless hole of due diligence is you can just keep digging and keep asking, and then at some point you build a conviction. And what is that point? And we've got a scorecard and some frameworks, etc. But there's an intuition part, there's an analytical part, there's a human interaction, judging people. How do you assess resilience, for example, which is such an important part of the success of a startup on the founding team, is their resilience. How do you assess team dynamics, etc.? It's not easy. I have newfound respect, but also, we've discussed amongst, with my co-founder and I, is when are we convinced ourselves versus what do we think the group will like? And in a way, we're trying to balance, like, if we know that if we present something that's super hardcore, hardware only in some obscure industry, it's going to be a hard sell. But if we're convinced and we're willing to put our money in, then we should do the work of finding that subgroup I spoke about that is willing to join us. Whereas sometimes we go, let's just do a nice little SaaS enterprise, software only. Our life would be so much easier. So we've taken a lot of hard cases on, but we try to find that balance. Sometimes it's nice to do a no-brainer, if you will. But does that mean they're going to be more successful? Of course not. You have no idea.
Yep.
I'll tell you in 7 or 10 years.
Yeah, sure, certainly. All right, let's now do the rapid fire round, wherein I'll ask you 5 quick questions about the investing that you're doing through Rainmaking, and you have to give 5 quick answers. Sounds good?
Mm-hmm.
All right, so the first one goes, what are the sectors and regions you invest in?
So Europe and Africa, energy, transportation and mobility, food and ag tech, and decarbonization.
Great. And what's the typical stage of investment?
We're stage agnostic. So typically it's been seed A. We don't care about stage. We care that the startup is amazing and a VC is leading the round.
That's great. What's the typical check size you put in?
250 to 500K. The average is probably approaching 300 now, and I want to get to a point where I consistently do 500 or more.
Great. Where can founders pitch you?
They can't. We don't seek random inbound. Obviously, good founders always find a way of getting to you through your network. As we tell them all to do that, but we don't seek random inbound. We're doing our own recruitment. But of course, they can go to rainmakingimpact.com and figure out how to get to us.
Yeah, awesome. And last one, where can our listeners follow you?
Rainmaking Impact on LinkedIn. I think, what's our Twitter handle? RMI Syndicate, I think. I don't even know. But mostly on LinkedIn, we're pretty active. That's where we put most of our material. And of course, join the syndicate. You get that monthly or so deal email and see if you like the deal and co-invest with us.
Certainly. So can anyone join the syndicate, or is there is a selection criteria for that, eligibility criteria?
Yeah, people can receive the mail, but when you want to invest, again, you're going to have to go through the Odin platform and go through these hoops to demonstrate you're a sophisticated investor, do KYC. So it's not literally anyone can co-invest, but they can see the deal. They can see that they can subscribe, and obviously we want active investors to subscribe to the email.
Certainly. Great. So I'll make sure to put all those links in the show notes below. It was great talking to you, Alex, and sharing your insights on the investing that you're doing through your climate tech syndicate, and wish you luck and happy investing.
Thank you. Thanks for having me, Prashant.
Pleasure hosting you.